Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 22nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't have your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. In Canada, we got core retail sales coming in at unchanged, was expected to be an increase of 0.6%. We also got retail sales coming in at 0.6%, was expected to be 0.7%. So both of those, a bit of a pullback there. Across the pond, we got CBI industrial order expectations out of Great Britain came in at -3, which was better than the expected -8. Here in the United States, we got existing home sales came in at 560 million units and was expected to be only existing home sales was 5.6 million units and it was expected to be 5.43 million units. Also, we had consumer confidence come in at -6, was expected to be a -8, so a little bit better on that front. And then the Richmond Fed manufacturing number came in better than expected at 4 versus the expected 1. So a nice jump in existing home sales, making the overall people probably get off of their rocker, if you will, and get out there and buy some homes with the pending increase in interest rates. So people trying to maybe lock in some low interest rates, and they're getting off the porch and going out there looking for some homes. We also have a bank holiday in Japan, so that could really negatively affect some of the volumes that we'll be seeing today. It's going to really start to wind down, I think, heading into the Thanksgiving holiday, and then Friday is pretty much a very slow day for most markets anyway. On to overall markets. So we got crude oil here, /CL down about 50 cents on the day. It did go up and blast through that 61.8 Fibonacci level earlier this morning, but has since come off and are very close to the lows of the day. So I've decided to do something around that. It's just starting to look pretty bearish on that front. Gold futures looking down to test the $2,000 a troy ounce metric. That is a psychological level, and it really kind of lines up with what these are right here as being on support right now. But the real line in the sand, I think, is that 12,000 mark or 1,200 mark. Sorry, a little off today, I guess, with some of my my talking points. Anyway, the bonds up slightly on the day, but the overall market still in a bearish trend and not looking to turn around anytime soon as far as I can see. The Dow Jones Industrial Average, you're going to hear this all over the news, probably a new all-time high, eyeing up that 19,000 level. Overall market really wants to go up there, and we tested it today, broke that number so everybody could ring the bell, but a real thing to see is if we can settle above there in my eyes. NASDAQ futures also pressing up against the value area high, which is where it starts to get a little overextended to the upside, although our point of control is very close to that. That still should act as resistance going a little bit higher on the NASDAQ. E-mini S&Ps, another all-time high as well. That 2,200 level, again, a big psychological mark that the market needs to settle above for the bulls to really celebrate that number. Just being printed isn't as influential as if it were to actually settle there. The other thing is that happened overnight. As you can see on the 15-minute chart on the breakdown, the day session didn't print that number and has started falling away from it. So that being said, overnight isn't going to be carrying as much weight as if that had happened during the day. So It's going to be interesting to see if the bulls can rally that up towards late in the day and get to settle above that 2200 historical level. On to the overall markets that I've done. So these are the couple of trades that I've added today, and an XLU, which is the Spider utility ETF. Decided that it looks like it's kind of made a bottom. It came down, traded below this value area low last week, and I've kind of just been watching. It got real choppy, but today it looks like since it's broken above that 9-day moving average, looks to settle above there. I think that we might be able to push a little bit higher, and it still has pretty decent implied volatility for an ETF. It's just above 30. I think it was around 34 when I put on this trade. And I did the January 43 puts, and I sold them for 28 cents. So just a little trade to add some positive deltas to my overall portfolio, as I've gotten really short as of lately. But this also contributed to adding the short deltas. So I did this trade first and then decided, you know what, I want to add a little bit of long deltas to my portfolio, as I'm getting a little bit short, a little bit overly short, especially right now, just with some of the trades that I've taken off. So I decided to do a synthetic short with Wells Fargo. And if you look at yesterday's candlestick, it was just an engulfing pattern, came up and had a tweezer top right there. It just started looking like every time it got up there, it really started failing. And after this big massive rally we saw on that sector rotation last week, this seemed like it was a little bit overdone to the upside, and we might be able to get a bit of a pullback as people start to take some profits and things of that nature. So I went into the December and sold the 52 calls and then bought the 52 puts. Now that's the way we create that synthetic short. It's just like shorting the stock, but I don't have to borrow it. I don't have to pay dividends and things like that. So not that the dividends are going to come into play here, but that's just a general rule with the synthetic shorts. And I did an hour-long webinar on it. You can go to protraderstrategies.com, sign up for that. And with that synthetic short, with those 52 calls that I'm short and the long 52 puts, I was able to collect a credit of 50 cents. So that puts my break even at $52.50. So my break even is above where I entered that trade, and it is above where we are currently trading. So that's a nice little way to build that out. I talk about all those rules in the webinar. Go check that out. Friday we're going to be doing a how to manage a iron condor or a strangle if it starts going against you. I'm going to go through all the rules on how to set that up and manage that type of risk. All right? If you can't take that, take it easy.